Hey guys, Mike Piccolo, Caliber Real Estate. We're in a crazy times, a lot of things changing. I thought it'd be a great time to hop on Zoom, grab my buddy and lending partner, Mason Buckles with Caliber Home Loans, to get a lot of really important questions answered that I've had a lot of clients ask, especially one that's really pertaining to the beginning of the month that we're in right now. So, Mason, welcome. Thanks for joining us.
Thanks for having me, bud.
Yeah, man, I think you've been pretty busy lately.
We have. It's unique trying to figure out what the new normal is, but people are still buying houses, still wanting to refi, wanting to do what we do. So we're happy to be of service. That's for sure.
Yeah, I don't think we've hit the normal part yet, but yeah,
No,
absolutely.
to be honest, in the basement bedroom here, trying to run the show. So
Exactly. And I'm pasty and white, so
I wasn't gonna say it, but
I did put a shirt on, so we're good there.
small victories.
So real quick, I do want to start with something pretty important. I know a lot of anxiety and just trepidation of the beginning of the month. A lot of people having to pay mortgage or rents when they may be unemployed right now. I think we had 10 million people hit unemployment the last 8 days, which is just
It's 3.3 last week, 6.6 new this week. So yeah,
pretty crazy.
We've been getting a lot of calls. Thankfully, at least right now, it's not, as crazy as it was about a decade ago. But the big news, the big headline is the term forbearance.
Right.
And that's where I think there's a lot of confusion. And I want to make sure that in our time today, Mike, that we talk a little bit about that, because I think forbearance is a nice option on paper, but I think it needs to come with a warning. And what I mean by that is, when you think about the term forbearance, it's part of the CARE Act, the stimulus plan that was just released, and literally, your lender, based on Fannie Mae, Freddie Mac, and HUD's guidance, will allow you to essentially suspend or hit the pause button on your mortgage payments. It starts with 3 months, and it can go up to 6. And I've heard of, even 9 to 12 months for those extreme circumstances. I think the misconception, though, is people think, oh, my payments are just going to like magically get put to the end of my mortgage, and that's not the case. Really, what you're doing is, even if it's just the 3-month option, you're allowed to have 3 months of not paying your loan. But come month 4, when that forbearance period ends, they're all due. So if you
right,
plus that payment, so you're really looking about 4 payments due that month, 90 days out from today. That's going to be a big check for some people, right? And if you're talking about being unemployed and everything else, then obviously it compounds in terms of the financial impact. You do have options there, but the bottom line is that the lender has their right to enforce payment or start their proceedings, which would be either a loan modification. If you loan mod, I remember that from a decade ago, that was a popular route a lot of people took. That crushes your credit rating, right? So you'll stay in your home, and you may have a more affordable mortgage, but you're probably not borrowing again for a while if you have the multiple mortgage rates recording on your credit. The extreme circumstance, of course, would be foreclosure and everything else. So with that process, your equity's at risk. Obviously your credit rating's at risk, and ultimately your home's at risk if you choose that route. So I think when it comes to forbearance, we don't want to think of it as a free pass, right? It's there for the people that are truly impacted. But for those people that are just like raising their hands saying, oh, hey, maybe I just won't pay my mortgage and take a little time off from it right now, you're not making the right choice for your future when it comes to just your credit rating and your home ownership.
so it's confused with forgiveness, but it's not forgiveness. It's just the pause, right?
Absolutely, yeah.
So if it was, I've called quite a few lenders just to get some information. If there was a lender that said, hey, we'll put it at the end of your 30-year mortgage, put those last 3 months on there. There's probably not too much scariness about that, right?
I don't know lenders that are actually doing that. There was a few lenders that came out of the gate pretty early, really before we had the guidance from the agencies on how they wanted this to be handled. And if anything, I think that was a little reckless, because it's not aligned with what the reality is. Right. And the people that might have taken those options are probably going to get a bit of a rude awakening as they work their way through that forbearance or forgiveness period. Because the bottom line is, the lender is in the business of collecting a mortgage payment. And to tell you that you're not going to have to pay and they're going to put it at the end, you will feel an impact. They're going to somehow impact your credit rating because you're not making your mortgage payments. And I want to think of it as a last resort, right? It's kind of the last option for you because you will feel an impact one way or the other.
Right. So don't jump on that now. Just wait till literally you've
Yeah.
got no other
You
option.
know, if you're working, if you're earning, or if you have the money in the bank, pay a mortgage.
So speaking of mortgage rates have been pretty wild in the last
Yeah.
4 weeks. We saw them kind of shoot up, and now we're starting to see them, I think, get back down. Where are rates for purchases right now,
Yep.
and even refis, real quick, if you can tell us?
Yeah, to speak to that, I think there's a really important thing to keep in mind here. It's not business as usual, but business is going on, right? So this week alone, my team, we've had 4 clients that have gone under contract. I have today 4 other clients that wrote offers, right? So there is an opportunity here for those buyers that are still willing to be in the market, and for their realtor partners that are doing the virtual tours and using social distancing protocols. Interest rate wise, yeah, wild month. Really, the month of March was, well, in my 19 years, probably one of the most volatile I've seen from a rate perspective. I saw rates move up and down, full percents in a matter of a day, kind of thing. But right now, this week, we've been locking primarily in the low threes for all of our clients. So you've heard the rumors around like the unicorn, 2.75 30-year fixed rate. I can tell you, my office that I manage in Bothell, that first week of March when interest rates got down to historic lows, we saw a lot of competing offers. I didn't see a single offer below 3% without considerable cost on a 30-year fixed rate, but the majority of what we saw was underneath 3.5. So we were sub 3.5, which is still all-time lows. Yeah.
So let me ask you, I know that there's some extra overlays being put on by lenders right now. They're really trying to take that box that was probably this big of requirements and things, for potential buyers, and kind of just really making it tighter because there's a lot more risk out there for those lenders. So what buyer pool would you say has been kind of most affected? I've heard jumbo's definitely been affected, first time buyers, but I'll let you speak to it.
Yeah, there's, the liquidity issues in our industry right now from a servicing perspective are what are starting to tighten that credit box. And honestly, just with the amount of money on the sidelines still from a market standpoint, with stocks and bonds and gold and treasury all kind of selling off, there's just not a lot of buyers for what we have in terms of our secondary market outside of the Fed. And what we're seeing is, like you described, the credit box, as we call it, is tightening. So your lower down payment buyers are going to feel a bit of an impact. Your lower credit score buyers are going to feel a bit of an impact. Every lender is treating it a little bit differently. So it doesn't mean that, lender A down the road, if they can't do it, doesn't mean that I can't, right? So that's one of the things that's really important when you're working with a realtor, is to make sure that you have resources, that you can look to different options. But what I've seen, for example, on the government side, BA and FHA loans, they used to be able to go down to a 580. They bumped that up to a 620. That was really the standard up until about 4 years ago, coming out of the housing crisis of '08. So it loosened, and now it's tightening again. We're seeing added reserve requirements. So, months, just basically savings after buying the home. Do you have, 3 to 6 months of your payment in the bank still?
Right.
So I think it's responsible, right? You're trying to be responsible there, and they're trying to make sure that, we're not having people get into homes right now where if they lose their job, they're going to lose their home kind of thing. So it's trying to make sure that we're still serving the community, but again, just kind of taking those kind of on the edge buyers that maybe could have snuck in and got a loan, 6 months ago. Right now, it's not their time, unfortunately.
Are you guys still doing the FHA bond program where you're doing, payment assistance? Is that still?
We are. There are a few of our peers that have turned that off in the short term. I won't get into kind of the rumor mill around it. I've heard some different stories around why. But if you think about it, that is one of those, more at-risk programs for default, right? You're talking very little equity or skin in the game. Typically, on those type of loans, you see a lower credit rating or lower credit tier, and just not a lot of money in the bank, right? People that utilize those programs, while they're great, my team, we do 3 or 4 of them a month, but the bottom line is that risk for that asset class right now is one that's being scrutinized.
Right. Okay. I was waiting to get the numbers from the Northwest MLS to kind of see how March ended up. And, it was pretty shocking because that's really when the lockdown and all stuff really went down. But we really saw that houses were still selling. And in fact, I think, let's see, in King County, new listings were only down 5.7%. In Snohomish, it was 1.3%. So people were still listing their house, even though at one point, all of us were handcuffed. We couldn't even show them. But even that, sales were up. The sale price was up 0.7 in King County and 4.3% in Snohomish County. So there are definitely still transactions going on. My question is, what do you see? I mean, I feel like there was a layer of buyers that were prepared. They've been working with you and other lenders. And as that layer kind of gets into those homes, and as this lockdown continues and the unemployment and all the craziness that is going on, what do you foresee? And I know you don't have a crystal ball unless
Right.
you can.
Okay, let's find it. Yeah.
But what do you foresee in the next 30 days that buyers should be prepared for? And then maybe after that, once the lockdown is lifted, please,
Right.
what do you foresee how long this is going to take to hopefully?
Yeah, let's hope it's just 30 more days at this point. But like I mentioned earlier, while we've seen a bit of a slowdown compared to what we normally get in terms of just buyers that are securing homes each week, it's not for a lack of activity, right? I think it's just right now you've got, buyers that are kind of putting themselves on the sideline, understandably, with the uncertainty around economic status, et cetera, employment status. And you've got sellers, kind of same thing. Sellers are going to want to be more careful with who they're letting in their homes, et cetera. So what we're really focusing on right this moment is making sure that our buyers are fully qualified and approved, so that when you, Mike, go show them a home, if you choose to meet them, or if you do the virtual tour, et cetera, you're taking that risk, but you're taking that risk because you have someone that's truly going to be able to take action.
Right.
I think coming out of the lockdown, there's going to be, hopefully, some pent up inventory that will be released, people that are just kind of waiting it out right now and staying in their homes. Most of what I'm seeing that's transacting right now is vacant. We have a number of deals that are not, but the newer transactions seem to be the ones that are vacant homes.
Right.
So I expect to see more inventory come to the market as people start to get more comfortable with the idea of listing and letting tours occur, et cetera. And I don't see buyers really slowing down outside of those that are impacted within their employment. So if anything, right now, what was already a shortage of inventory is probably a little further exacerbated. But ultimately, we should get a nice wave. And I expect, just like we saw before the lockdown, was really kind of a frenzy of activity.
Right.
I expect that to ramp right back up. And in the meantime, like I said, we're probably seeing 65, 75% of what we normally see still. And that will probably continue to diminish. But, the further we get into lockdown, the further it slows down. But I expect it to ramp back up very quickly.
Cool. Yeah, I definitely have quite a few people that are kind of waiting, seeing what's going to happen. But I would say if you do have a vacant home that you could sell right now, I mean, inventory is low. Don't wait, because here's the deal. Once everybody does come on market, once this thing lifts, like Mason said, if there is a frenzy, you don't want to have all that competition. So if at all possible and it's something you want to do, definitely do it. Other than that, my friend, that's all the questions I had for you, unless you got anything for me.
Yeah, I would just say, keeping in mind transactionally, while you're doing the virtual tours, et cetera, obviously you have your social distancing protocols. We're still able to do appraisals. We're still able to fund transactions and record them with the county. Everything is just remote right now, but appraisers can go to the homes. We've seen the guidance lifted where in the past that interior inspection was required on every appraisal. Well, Fannie, Freddie, and FHA have all moved, and VA have all moved to allow for exterior only as needed. That would be on primary residence. If it's investor base, it's going to be inside still. But I guess it's just making sure that people don't put themselves on the sidelines for no good reason, right? If you've got stable employment and you want to buy a home, there is a really nice opportunity in the market right now.
Exactly. And if it is your primary home, it's something you're going to live in for 10, 15 years, waiting to maybe get, if there is even a downturn. I mean, we haven't seen it yet, like I said.
Yeah.
But waiting to get maybe 5% off a home in the end of 10 years, it's not going to make that much difference. But with your
and I'm not seeing it. I know you're seeing it too, and your buyers in the competition. Like every one of our buyers that are writing an offer, even right now, they're competing.
Yeah,
It's very rare that they're not. So, this isn't a housing related crisis, right? This is a viral related crisis. This wasn't because of a bunch of bad mortgages and overinflation on values. This is, something we're all dealing with, but ultimately it's not, the housing industry is not broken, right? And there's opportunity there. And I don't expect us to see, I hope I'm not wrong, right? But I just don't expect us to see a huge decrease in the home prices. And then especially coming out of this, I think it's going to be, typical frenzy of what we see in the spring and summertime.
Well, we all hope, Mike.
Yeah, exactly.
Well, you've heard it here. So if you need any lending needs, please reach out to Mason Buckles, Caliber Home Loans, or reach out to me. Better call Mike. Mike Piccolo, Caliber Real Estate will get you taken care of, and I'll get you connected with Mason. So other than that, man, take care. Wash those hands.
Yep.
Be safe, man.
Be safe.
All right,
Enjoy the quarantine.